Gold has surged to an all-time record high of over $5,000 an ounce. The rand has also strengthened to below 16 rand to the dollar for the first time in almost 4 years. And of course, to unpack this and tell us about the gold and rand rally, I am joined in studio by SABC News' economics editor, Tshepo Mongai, who of course is giving us some details around the impact. What does the good news mean when it comes to the country's economic recovery and the impact on South Africans, ordinary South Africans who are hoping, of course, to get some leverage out of the good news. So to expand on the conversation, we have in studio Tshepo Mongai, of course, giving us a sense of the impact. Gold surging past $5,000 an ounce for the first time in nearly 4 years. Tshepo, very good afternoon to you. What do we owe this to?
Well, many of the analysts actually were expecting gold to have reached these levels, the current level of over 5,000 by end of the year. This actually tells you how things are actually moving rapidly, but of course in the right direction. So we have seen this morning on the JSE, the JSE, of course, doing very, very well at 120,000 levels. And of course, the main driver were the resources, which were up around 3%. As you see, most of the gold counters, of course, gained over 3%, 4%. And it's indicative of the risk aversion that we are seeing globally. And of course, investors are seeking those safe haven space, which gold provides.
Yeah.
And of course, for the JSE, you can't think of any other bourse globally that gives you such a good exposure to gold. And that's why we are also seeing the JSE, of course, continue to touch record levels on the back of mainly the yellow metal, the gold price. But we've also seen a very good performance coming through in other base metal. I mean, you can think of palladium, platinum, silver also continues to shine.
So is this price level more about global uncertainty, inflation fears, or is it specific geopolitical risks as we try and get a bigger sense of the other influential factors?
Well, it's a combination of factors that you have actually alluded to. I mean, the US, of course, expectations are that the Fed will probably would cut interest rates. There's that expectation that the Federal Reserve is really under pressure from the administration to do something about it, and some actually believe that they will be cutting. And of course, when it comes to that, we have interest rate differentials where investors would actually look for higher returns, and you can't think of any, because we actually still offer much higher returns compared to the US, which would offer anything around 4%. We still, our rates are still much higher. I mean, if you think of, for example, the repo, which is over 6%. So you get a little bit more when it comes to such benchmarks. But also it's the uncertainty that we are seeing globally, where people are worried about what would be the impact of the tariffs, what would be the impact of the AI, which has been the fuel that's driving the surging global stock markets. What would happen if we lose that momentum? So there are a whole lot of issues, issues of Greenland, of course. What is it going to happen? Is it going to be a military or not? And indeed, we can't preempt President Trump, what he's going to do. So when investors are starting to ask those questions and they are not able to come up with definite answers, it makes it very jittery for them. And that's
very quickly, Tshepo, before we let you go, what about ordinary South Africans and savers who are, battling on one end with the challenges of the impact of things like foot and mouth disease? I mean, meat prices have gone up, but of course, some ease coming up when it comes to the price of fuel.
Well, there is a good South African story, I must say. I mean, you touch on inflation. our inflation has really been coming down. Of course, we've seen last week's number. There was a small movement upward, but the economists are telling us this shouldn't concern us that much because the overall picture is that of inflation that will continue to remain stable. And indeed, the Reserve Bank is also expressed a similar view that inflation will remain contained, and they're quite confident, even if we might have temporary upward movement in the rate of inflation. But for many South Africans, of course, they would enjoy a stability in terms of price movements when they are shopping. So there is some good news there. But then, of course, the increase in gold price, it means that our miners will actually benefit. Jobs would be a little bit more secured in the mining sector, and of course the wage that they are demanding, albeit I don't think we will see any significant movement upward of 4%. We may see maybe around 4% wage increases, but indeed the sector will be able to stomach those kind of increases, and at times even a little bit more, because I'm sure workers will demand more as they see this gold price.
Thank you very much. Leaving it there for now, SABC News economics editor Tshepo Mongaile giving us a sense of the impact of the gold price. With that, let's take a look